Trading is more than just numbers, strategies, or indicators. It's a mental game that tests our strength, patience, adaptability, and focus. In this video today, I'll be sharing with you some powerful quotes that can each hold a lesson that you apply directly to your trading psychology. Think of these quotes as guiding principles. Now let's dive in and see what they mean and explore how they can shape our mindset on this trading journey. First off, trading is full of ups and downs, and setbacks are just part of the game. Fall down 7 times and get back up 8 is about developing the grit to stand back up every time. Think about this. Maybe you've just had a tough loss, one that shakes your confidence. Rather than letting it define you, take a breath and look at it as a lesson. What can you learn from it? Did you miss a pattern, or was it just the market's unpredictable being unpredictable? Each loss teaches us something valuable if we are willing to learn. In trading, resilience means not only getting up, but getting up smarter, with more insight. Remember, it's not about avoiding failure, it's all about coming back stronger. One win doesn't mean you're invincible, and one loss doesn't mean you're done. Success is not final, failure is not fatal. It's the courage to keep going on that truly matters. Imagine having a great run one week, but then the next week the market shifts and you lose momentum. The easy thing would be to either ride the high on past successes or let failure discourage you from trying again. But trading is a marathon, not a sprint. Every day, a new opportunity to learn and adapt, to take what you have learned and keep moving forward. So keep your head in the game. Remember, courage is what keeps us steady in this journey. Patience in trading is like waiting for the right moment. It's tough, but the rewards are real. Patience is bitter. Its fruit is sweet, though, remember that. Imagine you found a setup, but the price isn't quite there yet. It's tempting to jump in early thinking that a small difference won't matter. But experience teaches us that waiting for all the right signals, no matter how hard it is, pays off. By holding back and sticking to your criteria, you avoid unnecessary risk and enter trades with confidence. The market rewards discipline over impatience. So embrace patience, knowing that the best trades come to those who wait. But then again, patience doesn't mean passively waiting. Good things comes to those who wait, but only what's left by those who hustle. In trading, while waiting for the right entry, you're actively studying, monitoring patterns, and staying prepared. Imagine you've identified a setup, and instead of jumping in, you're refining your plan, deciding on your entry point, your stop loss level, and your exit targets. During this time, you're not just waiting, you're preparing, you're analyzing, and setting yourself up for a confident decision. Patience in trading is active, staying ready so that you know when the momentum is right, you can take it decisively. Again, remember, it's the quiet hustle that makes the difference. Pride, pride can cloud judgment. And in trading, that's the biggest recipe for trouble. Pride comes before a fall, which reminds us to stay humble. Let's say that you've been on a winning streak, feeling like you've mastered the markets. I say it's a Superman concept. That sense of invincibility can lead you to take bigger, riskier positions. But the market has a way of humbling us when we get too confident. Remember that. Humility in trading means respecting your strategy, sticking to your risk management, and not letting a few wins change your approach. Success happens, losses happens too, even to the best. And humility keeps us prepared and careful rather than overconfident. Success in trading isn't just about being right every time. It's about managing the outcomes. It's not whether you're right or you're wrong, but how much you make or lose when you are. Imagine you're in a trade and it's moving against you. Ego, ego might tell you to hang on, turning it around. But smart risk management tells you to cut your losses and protect your capital. Or if you're in a winning trade, ego might make you cash out early, but patience allows you to maximize that gain. Managing your risk wisely rather than aiming to be right every time is what builds long term success. The market is constantly shifting, and we have to shift with it. The measure of intelligence is the ability to change, as Einstein usually says or has said. Let's say that you're using a strategy that has been effective in recent months, but now it's starting to underperform. Instead of stubbornly sticking with it, adaptability tells you to reassess and maybe try or change a new approach. In trading, sticking to one way could be a pitfall. Markets evolve, and so maybe we should too. Being flexible, willing to learn and adapt is what keeps us resilient, ensuring that we still stay relevant no matter how the market changes. Surviving in the market isn't just about being the smartest or the most aggressive. It's about being adaptable. The one most adaptable to change survives. Imagine trying to stick to a rigid strategy during a high volatility event in the markets. It might work sometimes, but a more flexible approach allows you to pivot as the market decays. Adapting to market conditions doesn't mean abandoning your principles. It means evolving your approach when needed, when required. Those who succeed in trading know how to stay flexible, but also allow them to grow, learn, and respond to whatever the market throws their way. Now, down to the last two. Ambition is key, but trading needs us to stay grounded, right down. Keep your eyes on the stars and your feet on the ground. Let's say you set a goal to increase your returns significantly. It's a fantastic idea, a fantastic vision. But without a grounded approach, that ambition could lead to reckless decisions. Focusing on calculated trades and sticking to your plan helps you stay balanced. Dream big, but keep a realistic approach. It is about balancing ambition with discipline. So you build steady progress instead of risking it all for quick gains. This is the last one and my favorite one. You can't control the market's next move. That's one thing you have to remember and you have to really ingrain. But you can always control how we respond. You can never control the market, but you can control your reaction to what you see happening in the markets. When a trade doesn't go as planned, the first reaction might be frustration or panic. But if we take a moment to breathe, step back, we can choose to respond logically. Emotions are natural, but learning to manage them keeps us in control, helping us make better, more calculated choices. The market may be unpredictable, but our responses can always be measured and rational. So that's my 10 favorite quotes that should guide you with your trading psychology. Leave it in the comments. Let me know which is your favorite and which resonates the most to you. Remember, trading is not just about following a strategy or reading the charts. It's about mastering your mindset. Each of these quotes have offered something powerful: resilience, patience, humility, adaptability, and focus. When we integrate all these qualities into our trading, we're not only going to become better traders, but also build character. Thanks for watching this video. Let's take these insights forward as we continue on this journey. Please remember to like and subscribe. And again, leave it in the comments. Tell me which is your favorite and which resonates to you, or maybe even suggest some other quotes. Take care now. Bye bye.